Indeed, traders need to know this because, for example, if you are just relying on technical analysis without knowing any fundamental analysis or factor that influence the market, then you are missing out. This is the secret I'm going to reveal, and we shall begin on gold. So we shall be using this application I discussed of recent in my video, and the application is called Go Forex. And Go Forex, once you reach here, you just type or tap here on learn, and then you have very many tabs. You have that one of trade, learn, analyze, top, and platform. So I will go with this one of learn. I'm just going to go with that of learn. All right, so once you are here, we want to go through these topics, but I will just choose one which makes the focal point of this video, and that is gold prices and Forex. We want to look at gold because most of the traders trade gold. After gold, we shall go to crude oil in the next video, and we shall also look at the following, the fundamentals. So let's look at gold and Forex. So let's tap on that. So let me just read through real quick. Gold is a classic, right, investment. It has provided a medium of wealth preservation for centuries, especially when financial markets are hit by uncertainty and fear. For example, during the global financial crisis in 2008 and 2009, gold's value grew by 47%, following the rising demand for it, as most investors view gold as a safe haven. It is possible to trade gold in physical form as a jewelry or bullion, electronically as gold exchange traded funds, as stocks of gold digger companies, and as currency XAU. Follow what happens in the gold market, because gold price fluctuations can serve as valuable hints for trading other correlated currency pairs such as AUD USD and USD Swiss francs. So before we look at how gold can give us hints to trade other assets like AUD USD and USD Swiss francs, I want to explain what we have just read. Gold is a safe haven currency. So during political turmoil, especially what is happening currently, like the wars, the political instabilities, especially that of Ukraine, right, and Russia, especially what is happening in Israel and the other country. So those kind of political instabilities also push or give an idea for investors and traders to put their money in gold, right? Because they believe it's a safe haven currency. So when we are having political instability, we will be seeing gold gaining value over time. All right. So, but not only that, gold can also give us hints on how to trade other assets, as they have told us. And those assets is what we are calling AUD, which is from Australia, and Swiss francs, which is also from Switzerland. So let's read through and we see what impact, what kind of idea can gold give us, especially when we are trading these assets. All right. So let's read through. Here we are looking at gold and AUD USD. So the US dollar, right, has historically been the global currency and exchange instrument for gold, right? Parallelly, Australia is the second biggest gold mining nation after China, right? Follow the AUD USD currency pair and gold prices. As analysts have observed an 89% correlation between both investment instruments. When all other factors are neutral, when USD value decreases, demand for gold increases, right? Higher demand for gold favors exports and the trade balance for Australia. So when people demand more of gold, right, it means it will favor exports, and therefore AUD from Australia, because it is, we have seen that Australia is also one of the biggest, right, the biggest gold mining nation after China. So what means when it is exporting, right, people, even if they are having gold, it means the demand for gold will be high and to favor the exports of Australia. It will also favor the Australian currency, which is AUD, because for whichever trade transaction they will, that will be going on, it means they will be paying in AUD, right? Australian dollar. So the next thing, high exports strengthen the Australian dollar against USD. As a result, the AUD value goes up along with the value of gold. So that's why you are seeing these two arrows. So as gold rises, right, it is very much correlating with that of AUD. AUD USD will be rising, while gold will also be rising. Okay, so before we continue, let me just illustrate something by going to MT5 and access the real markets. So let me just go to MT5 platform. Okay, it is here. So let me show you something. So these are the pairs actually you trade. Okay, so let's look at AUD, which is this one. As you can see, let me go to 1 hour time frame. What do you see? Gold is bullish, rather AUD is bullish, which means Australian dollar is increasing in value. Can we look at gold? And okay, let's go to gold. If I go to gold, this is gold. Can you see, guys? Can you see this bullish momentum still on 1 hour? The trend was down, right? It came this way around like this. Are you seeing, guys, what is happening? Gold is also rallying up. Are you seeing? If I go to M15, you can see gold is rallying up, and right now I think it is just doing a pullback, something like this. Then it can continue moving up. All right, let me just go to 1 hour again. Right, I'm thinking gold is doing like this. Okay, then it can continue. All right, so let's continue reading and we go to the next thing. So now you have seen the idea behind gold, right? And we have found out that Australia is one of the biggest gold mining country or nation after China. So Chinese yuan and Australian dollar will also be rising when gold is also rising. Because if you are buying gold, it means you'll be using these currencies to buy gold. So an increase in demand for gold will also lead to an increase in these Australian dollar and that of Chinese yuan. So let's continue. For the Australian AUD USD currency pair and gold prices, as analysts have observed, an 89% correlation. So they usually correlate, which means they move in the same direction. 89%. They are positively correlated, not negatively correlated. You need to understand that. So let's look at another one, gold and USD Swiss francs. From what you can see on this table, they are showing us that once gold increases, USD Swiss francs goes down. You need to understand this. Normally we are always following the base currency, not the court currency. For example, if I have this pair XAU, that is gold, USD, right? Gold is the base currency, right? Now, if I have USD Swiss francs, USD, right, is the base currency, which is the United States of American dollar. If I go to this one, Swiss francs, it is what we call court currency. So whenever you see a chart, let me get back. Whenever you see a chart like this one is gold. So when price is trying to move up, right, that means it is this base currency, which is gold, that is increasing in value. So when we go to AUD, AUD USD, this one, so AUD here is the base currency, and because this chart is bullish, is going up, that means it is AUD that is running up. Okay, I hope that one is clear. Let's get back. So this means gold and USD Swiss francs are negatively correlated. Let's understand why. So I'm going to add USD Swiss francs, and I will go to quotes here. So let me go to quotes and I add gold, rather USD Swiss francs, and I'll type USD Swiss francs, sorry, USD Swiss francs, USD CHF. This is the assets here. So I'll tap on it, then I'll click on add symbol. All right, so you can see it is here. Once I tap on it, I'll click on chart. So, and I will access the chart. We saw, or we have read that gold negatively correlates with USD Swiss francs, which means, in other words, as Swiss francs, which is the quote currency this time, increases in the value, also gold will be increasing in the value. Since this pair is USD Swiss francs, where USD is the best currency, the chart will be sloping down when gold is moving up. Can you see, guys? Can you see what has just happened? When it was moving up, gold was moving down, as we saw. But now it is moving down. It was moving up. Can you see this? If I go to a lower time frame, you can manifest this. If I go to like M15, you can see it is sloping. Okay, it is moving down. So let's go to M15 of gold, and you also see that one. If I go to gold, can you see, guys? It was moving up. It was moving up. All right, so that's the negative correlation. That's what we mean. Okay, so and to new traders and all of you who didn't know about this, I hope it has been a great lesson to learn from. The next time we shall look at crude oil prices and Forex. So let's subscribe and turn on the notification bell icon to be notified of the next video I will upload for you guys. All right, until next time, keep winning.